Hello, and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 16th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today here in the United States, not so much across the pond, but here in the United States, we got building permits right in line with expectations at 1.15 million units versus 1.16 million units. And then we got CPI, which is Consumer Price Index, month over month, right in line with expectations as zero, unchanged. And then housing starts came in a little bit higher than expected at 1.21 million versus the expected 1.18 million units. So that one came in slightly higher than expected on the housing starts. And then we had industrial production and capacity utilization, which came in better than expected. Industrial production came in at 0.7% versus the expected 0.2%. And then the capacity utilization rate came in at 75.9 versus the expected 75.7, so it's slightly better than expected there. Capacity utilization is basically what the manufacturing sector is using on their plants in general, how much they are at capacity of that particular manufacturing sector. Anyway, on to crude oil. Crude oil pushing higher again by 67 cents, pushing right above that point of control. At the end of the day, there's a lot of oil out there. I say it time and time again, every time it rallies. It's just kind of bizarre to me. But in that it is rallying up on the day and breaking from what the equities were looking at being negative. So we'll get into that here in a minute. But gold pushing higher, well off its highs of the days, but up still $5 on the day, right about the mid-market or the mid-range of the day for the most part. Bonds continue to push lower and right up against the 50-day moving average. We'll have to see if that acts as support. You know, I talked about this yesterday. It looks like it wants to stay within this range for the foreseeable future anyway. Maybe build up this volume area for time and volume. But it is off on the day by about 19 points. So they're negative with the equities. Here we go with Nasdaq. Nasdaq actually below yesterday's opening, and we are down 17 points on the day, but off of the lows again. It's, you know, to me, I've been talking about it, you know, it's just the volumes are starting to slow down. Yesterday we did have bank holidays overseas, but today they are back open and we're still seeing low volumes, which just means that that breadth that I've been talking about on the markets is really getting low, which really kind of starts to look like a signaling of a top here. And the E-mini S&Ps /ES down 7 points on the day as well. On to the breakdown of the E-mini S&Ps, you can see as soon as we opened up the overnight session, for the most part after yesterday, the overall market just had a very bearish tone. We did have the highs of the overnight or of the session in the overnight session. But as of now, with these data points coming out, the market did get a little wanky. We're kind of trading right back and forth between today's value areas, breaking one of the point of controls from the previous days. So, you know, that one gets erased. The next point of control to look at is basically down here from last Wednesday. So that could be a target, if you will, if you're a day trader. And they're down, like I said, 7 points on the day. onto the trade that I've done. This is the only thing that I really have taken off, and this was along the lines of Steve Primo's Pet D gave a signal to buy. And the brilliant thing about the stocks is we got the buy signal right here, right around August 1st was the day to buy it. And if you were in the future, or if you were trading this as a stock, you would have been stopped out. But the brilliant thing about doing the options, it gives you a little bit more breathing room, keeps your powder dry. At the end of the day, my premiums didn't decrease that much, where I was looking at like a 50% loss of the premium that I paid. I paid $2.10. So like I would have been looking to get out if it was around $1.05 or double my money on the upside. And so it allowed me to stay in this trade a little bit longer using the options. And with that, on the August 1st, I did the September 165 calls, and I bought them for $2.11, like I said. So my out was going to be when the calls were trading for about $1, but that didn't happen. We ended up getting a nice little rally out of this after it consolidated for a couple of days and popped up. Today, I decided we got above this value area high and pretty close to doubling my money on that trade. I decided to get out of it, so I ended up selling those calls out for $4 even. So made almost $2 on that trade, which is quite nice. And moving on and going to reallocate that money elsewhere. So that's the only thing I've done right now. Target has their earnings coming out, so I'm going to be saving some capital for that. And follow me on Twitter at Wolfman's blog, because I tweet those out at the end of the day, what my earnings setups are going to be. All right, that's all I got for you guys today, other than for Friday we've got the webinar on the put butterfly, so check that out. You can go to protraderstrategies.com, sign up for that. The more the merrier. If you can't take that, take it easy.